We got a Nasdaq record high. S&P is now having its best July since 2010. And we're really not that far from S&P's record close of 33.86. Let's get to Pisani. Bob?
And Carl, 7-1 advancing to declining stocks. That S&P breakout last night at the close was very significant. But let's take a look at the sectors here. I think Jim's got a good point with oil at 42. That's the highest level since early March. Finally broke over that $40 range here, and that's helping lead the market up here. Energy strong, industrial strong, banks, which have been laggards for a long time, strong, tech's a modest laggard, healthcare slightly positive here. The S&P is positive for the year. I do want to point out almost two-thirds of the S&P is down for the year. Now, how does that happen? The S&P is positive and two-thirds of the S&P is negative for the year. Well, it can happen because you get these mega cap stocks moving that David was talking about earlier with Jim. When Amazon's up 70% in the year, no typo there. Microsoft, Apple, Facebook, look at those, and you know, we all know these are close to 20% of the S&P 500. It drags them up. Alphabet's at a new high today, by the way. At the same time, you look at the other end of these things, the destruction going on in formerly large sectors like energy, where we have many names down 50% or more. On average, they're down 30 to 40%. And I think most disconcerting is what's going on in the regional banks. And the decline that we've seen, many regional banks down 30%, but some of them, Wells Fargo, which is really more than a regional bank, but down, Comerica, KeyCorp. Remember, the S&P financial sector used to be very significant. Now it's only 10%. These sectors get smaller as healthcare and technology get bigger here. A little bit of a concern about a lopsided relationship in the S&P with the various sectors. So we're in the heart of earnings season. Unfortunately, the reluctance to give guidance we saw in the second quarter is continuing into the third quarter. Arvind Krishna at IBM, very typical of some of the comments here. In April, when we said we'll reevaluate in 90 days, maybe we're a little bit optimistic, he says. Uncertainty in the economy makes us unwilling to provide guidance. A little bit disappointing, but perhaps not surprising. So where are we in all this corporate guidance? We've said many times 40% of the S&P 500 declined to provide guidance in the second quarter. Kind of continuing here. So we don't get any guidance from Coca-Cola and IBM. Those are two big ones in the Dow, obviously. Although it's not completely devoid of commentary. Lockheed Martin actually gave better guidance than expected. Philip Morris's guidance appears to be above consensus, not by a lot, but it's above consensus. Even UBS over in Europe, they may resume buybacks. That was a surprise. And the credit losses in the second half will be lower than the first half, they said. Well, that's certainly optimistic. So it's not all completely doom and gloom. And you see everything moving up here that had any kind of earnings or commentary about the future today on the upside. Finally, I said the S&P is turning positive. Actually, there's some real global movement. Now, China's turned positive a long time ago for the year, so the U.S. is up. But Germany turned positive today. The DAX index turned positive for the year. There's a mini rally going on there. They've got a deal, of course, on providing stimulus now that's moving things. Korea also turned positive as well. And Taiwan, which has been getting kudos from everybody in the world about their handling of the COVID case, also has turned positive for the year. So there's some mini rallies going on around the world that's giving some hope to investors.